Bank loans are a smart way to fund fixed asset purchases, such as plant and machinery, land and buildings. They have cheaper interest rates than a bank overdraft. The interest rate might be constant, for example, 5% to 7% per year on the outstanding amount, or variable where the interest rate varies depending on the bank of country base rate. A bank loan, on the other hand, offers less freedom than a bank overdraft. Regardless of whether or not the cash flow situation is good, the company agrees to paying the bank loan repayments and interest. Failure to meet the requirements of the bank loan could result in the bank declaring the company bankrupt. Startups and firms with a poor track record of profitability and cash flow are unlikely to receive bank financing. Banks, who are increasingly cautious about the types of lending they issue as a result of the credit crisis, view such enterprises as high risk. A bank loan is a medium to long-term financing option. The bank determines the loan's fixed term, for example, 3, 5, or 10 years, interest rate, and repayment schedule and amount. The bank will almost always demand the business to offer some sort of security for the loan, albeit in the case of a startup, this security is frequently provided in the form of personal guarantees provided by the entrepreneur. Loans from banks of different types. In today's environment, loans can be used for a variety of purposes. It can be used for everything from starting a business to purchasing appliances for a newly purchased home. Let us discuss the many types of loans available on the market and the characteristics that make these loans beneficial to customers. Credit card loans. While using a credit card, you must understand that at the end of the payment cycle, you will be responsible for any purchases made. Even while traveling internationally, credit cards are accepted practically everywhere. It has become a popular loan kind because it is one of the most convenient ways to pay for your purchases. Simply fill out a short application form provided by the card issuer to apply for and obtain a credit card. You can also get a credit card by applying online. These plastic cards come with a plethora of bonuses and prizes. It's a debt that you must repay on time, but for which you will be richly rewarded. This form of financing does, of course, have its drawbacks. You should be aware that the amounts you borrow on your credit card are subject to a high rate of interest. If you do not pay your credit card bills on time, interest will accrue and you may find it harder to manage your money as your outstanding balance increases. However, if you use your credit card responsibly and pay off all of your debts on time, it might be your best friend in your wallet. Personal loans. Customers can get personal loans from most banks, and the money can be used for anything from paying bills to buying a new television. In most cases, these are unsecured loans. Before granting the personal loan amount, the lender or bank will require specific documents such as evidence of assets, proof of income, and so on. To repay the loan, the borrower must have sufficient assets or income. Personal loan applications are typically 1 or 2 pages long. Within a few days, the borrower receives notification of the loan's denial or approval. It's important to keep in mind that the interest rates on these loans might be rather expensive. These loans have a short repayment period. So, if you borrow a large sum of money, you may find it difficult to repay it if you do not properly organize your budget. When you need a modest loan and want to pay it back as quickly as possible, personal loans can come in handy. Home loans. When it comes to buying a property, a home loan can be extremely beneficial. It offers financial assistance and assists you in purchasing a home for yourself and your family. The terms of these loans are typically longer, 20 years to 30 years. Home loan rates start at 8.30% with several of India's leading banks. The lender will check your credit score before approving your loan application. If you have an excellent credit score, you may be able to get a house loan with a reduced interest rate. The majority of house loans are used to purchase new residences. These loans can be utilized for a variety of purposes, including home improvements, home additions, land purchases, and under-construction homes. Car loans. Purchasing a vehicle can bring you a lot of joy and satisfaction. A car will continue to be an asset for you, and it will be one of your most significant assets. A car loan might help you get closer to realizing your ambition of owning a car. When applying for a car loan, having a high credit score is advantageous because credit reports are used to determine your loan eligibility. The loan application is likely to be accepted quickly, and you may be eligible for a cheaper interest rate. Loans for automobiles are backed by collateral. If you don't pay your monthly payments, the lender will repossess your vehicle and pursue payment of the amount. Two-wheeler loans. In today's world, having a two-wheeler is a must. Bikes and scooters make it easy to commute, whether it's on a lengthy journey or on a crowded city route. It is simple to get a two-wheeler loan. This loan kind enables you to acquire a two-wheeler using the money you borrow. However, if you do not make timely payments and clear your obligation, the insurer will seize your two-wheeler in order to recoup the loan amount. Small business loans. Small business loans are loans given to small and medium-sized firms to help them meet their diverse needs. These loans can be used for a variety of things that can help your business flourish. Purchase of equipment, inventory, staff salaries, marketing expenses, debt repayment, administrative expenses, and even the opening of a new branch or franchise are all examples of these. The age of the business owner, the number of years the business has been in existence, income tax returns, and a statement of the previous year's turnover that has been audited by a chartered accountant are all frequent eligibility criteria for small business loans that vary from lender to lender. Payday loans. Salary loans are another name for payday loans. These are unsecured short-term loans that require the borrower to have a stable source of income. They are frequently associated with high interest rates. This is determined by the applicant's credit history, age, and earnings. Salary statements and other proofs of income would be essential documents. Cash advances. Credit card providers provide these loans, which allow cardholders to withdraw cash from an ATM machine using their card. The amount of money that can be taken off of a credit card depends on the available credit limit. The money must be returned along with interest, which is normally computed from the date the money was taken out. Cash advance fees, as well as ATM or bank fees, are all included in the price of a cash advance. Home renovation loan. Almost every lender provides home innovation loans. These can be used to cover the costs of renovating, repairing, or improving a home. What you can accomplish with a home remodeling loan varies depending on the lender. It can be used to pay for goods and services. It can be used to pay for the services of a contractor, architect, or interior designer, for example. You can also use it to purchase furniture, furnishings, and household appliances like a refrigerator, washing machine, air conditioner, and so on. Painting, carpentry, and masonry work are all possible applications. Agriculture loan. Agriculture loans are short-term loans given to farmers to help them fulfill their day-to-day or general agricultural needs. These loans can be for a short or extended period of time. They can be used to acquire agricultural equipment or to provide working capital for crop growing. Gold loan. A gold loan can be used to raise cash for a variety of purposes, including business expansion, education, medical emergencies, agricultural needs, and so on. A gold loan is a secured loan in which gold is pledged as security or collateral in exchange for a loan amount equal to the per gram market value of gold on the day the gold is pledged. The value of any other metals, jewels, or stones in the jewelry will not be considered for calculating the gold loan's value. Taking out a loan against your credit card. A personal loan secured by your credit card is known as a loan against credit card. These are frequently pre-approved loans that don't necessitate any additional paperwork. This can be converted into an interest-free personal loan depending on the lender. Following that, a certain percentage of people will be interested in it. When you convert a pre-assigned credit limit into a loan, you'll have to pay a processing fee. Loan for education. An education loan is a type of loan that is used to fund educational expenses for school or college. It may cover the course's basic fees, test fees, lodging expenses, and other additional costs, depending on the lender. The student is the borrower, and any other close relative, such as a parent, grandparent, spouse, or sibling, is a co-applicant. It is available for courses both in India and overseas. It can be used to enroll in a range of recognized part-time or full-time courses. They include both vocational and undergraduate and postgraduate training. Loan against fixed deposits. This is a loan in which your fixed deposit serves as collateral. For example, if you have a $10,000 fixed deposit in the bank, you can get an $8,000 loan. However, the interest rate on this type of loan is usually higher than the rate on a fixed deposit. Loan against mutual funds and shares. Some lenders will give you money based on the value of your mutual fund or stock. This form of loan, however, does not allow you to borrow large sums of money. Durable loan for consumers. Consumer durable loans are loans used to fund the purchase of consumer durables like electronics and household appliances. They can be used to buy everything from cell phones to television sets, depending on the lender. Some lenders offer consumer durable loans with 0% interest rates, rapid approvals, and low documentation requirements. Insurance-backed loans are a type of financing that allows you to borrow money against the value of your insurance policy. If your insurance plan qualifies for a loan, you can request the funds from your insurer. You can also use the investment as collateral for insurance. In most cases, loans are not available from the start of an insurance policy. You can apply for a loan against insurance after 3 years in the scheme. Thank you for joining us. Hope you will have a beautiful day.